In banking, journal provisions on the balance sheet is something that banks set aside in anticipation of losses, bad debts, bad
Right.
assets. Now, SBI came out with their result recently, and that is what triggered it. They have, for their year on year, their provisions have been down as much as 96.2%.
Oh.
Their profits have just gone up 8%. HDFC, same during the same time, year on year, down 10.4% their provisions. Profits just up 6%. ICICI Bank down 64.6% in their provisions allotment. Profits are up 36%. Canara Bank down 28.3%. Bank of India down 57%. Their profits were, of course, also 52%. The only anomaly in this were Bank of Baroda. It rose 11%, but they have had to put provisions aside because of their internal issues that have been coming to light. Axis Bank, which recently concluded its takeover of India's Indian wing of Citibank, they set aside 48%. That was up 48%. And Dena Bank, quarter on quarter, their provisions were down. They are in a loss.
Oh.
But year on year, their provisions were up. Mohit, my question to you is, does it augur well for the banking industry, or is it just something that banks are doing to shore up their profits?
Uh, Look, so honestly, I think on the overall banking space per se, we are extremely bullish on both the PSUs and the private sector banking space. Except, as you rightly mentioned, except for Bank of Baroda, I think the results have been overall fantastic on the bunch. SBI results were terrific, right? The cleaning up of the balance sheets is a story in real. And for last 2-3 years post-COVID, the way cleanup of balance sheets have happened, the way NPA numbers have come out. I think it's a massive story unfolding in front of us, right? And the overall India story, if you really want to capture, you have to capture. If you can capture it with one theme, it is banking per se, because finally this money goes out to the to all the sectors and individuals of the country which are booming largely, right? So my sense is yes, PSU space is extremely hot right now, and valuations have always been attractive in this space. SBI per se always looks like a fairly reasonable buy if they can continue the profitability trend and the margin trend and the NPA story. I think if they can just hold on to that NPA provisioning part of it, I think this stock is slated for a big up move from here. On the private sector banking space also, we've been fairly bullish. I think that's one space which has just not clicked for last 1 odd year. All the big names per se, which is your HDFC, Axis, Kotak, even ICICI to a large extent for last 1 year, hasn't delivered any great returns, right? So, and I think this is again a long time overdue kind of a move. If the overall story continues to be the way it is, I think this entire pack, the private and the PSU pack, should really surprise on the upside.
Mohit, just an additional question. When provisions go down as much as 96%, it does raise eyebrows. Do you think banks are doing their homework better that they do not have to set aside funds for bad loans?
And also to add to that, provisions are coming down at a time when we are in a high interest rate regime.
Yes.
I mean, the defaulting probability is much higher over here. So what's going on?
Okay, I think that's a that's quite a skeptical question from you, Suyash. So yeah, I understand where you're coming from. A high interest rate regime should definitely hit the lowest strata of the borrowers, either be corporates or the individuals, and which is not happening right now. But you have to also understand the background of it. RBI hasn't raised rates as much as other global peers have done, right? I think here the central bank has been extremely prudent in terms of the rate hikes, and we have been fairly stable on the rate regime for a long while now. My sense is I think the credit here goes to the central bank completely. They've not been overtly aggressive trying to tackle inflation because they've realized the true causes of inflation, and they've gone only to an extent where they can really see that the credit growth or the credit quality of the country doesn't get hampered to a large extent. However, having said which, I think if the rates remain high for a fairly long while, Suresh, what you are saying might actually come up true, because we have seen in US high rates have resulted in few banks collapsing, right? You saw a couple of cases in US where the lower strata of banks actually collapsed, and which is a global story. As the rate remains elevated, you will see the lower strata of borrowers keep getting eliminated from the overall ecosystem. So which might happen. Maybe the corporates who find it very hard to borrow might really struggle to catch up to a high rate regime. But I think that story, if the rate cycle remains where it is for another year or so, then perhaps that story might start unfolding. But as of now, I think it is looking extremely good. The balance sheets are getting cleaned up as we are talking, and I think there has been some great work and effort being put in on the entire PSU space by the central banks and the government to kind of clean up the balance sheets, and I think which is all showing up now. So overall, I think I'll give credit to the space out here and still remain positive.